Bitcoin has seen a nearly 10% dump over the last 2 days. But I think we can all agree that even though we did dump a pretty significant amount, it could actually be a very nice opportunity. And this might actually be the most crucial point of the year thus far. Now, obviously, as you guys can all see, Bitcoin has been consolidating and we're looking for a move towards either direction. So in this video, I'll go over exactly what we think is going to happen next, how a breakout of sorts here usually looks like, and of course, what's going on with the halving, what's going on with the liquidity, and how much profit are we in since I made a video yesterday. I'll show you. First, if you're not done it yet, make sure you go ahead and press that like button and check out my Twitter because I'm running a little $200 giveaway just for today. As you can see here, it's about 24 hours, but most of them have already passed. So just check it out right now over on Twitter. All you got to do is just follow me, press the retweet, and you're entered. And 10 people will win about 20 bucks just for fun. Anyway, as we described yesterday, we had a certain trading range that we've been trading in for about the last week that just yesterday we finally broke out of. And if we zoom in, here was the prior mentioned structure, we are breaking towards the downside and are continuing with a higher, or I should say lower high and lower low type of pattern. So basically a downtrend. And following that logic, the most logical level to go towards is further downside. Because generally speaking, when something is trending in the markets, albeit upwards or downwards, you expect it to follow. That's basically the rule. And there are sometimes exceptions to the rule. Like in this instance here, when you, for example, zoom out ever so slightly, you start to notice that even on the short term, we are sensing a downtrend. On the higher time frames, it's actually not that apparent, and it's looking more like yet another breakdown to happen. I should say breakout to happen, with, because of our market conditions, actually some bullish bias. So what I want to really break down to every single person here is just how important this support, the bottom of this triangle, basically the cord that's keeping everything together here, is. Because like I said in yesterday's video, the moment that we break through, there's really not that much to keep us afloat. Yes, there was some slight price action right here, but generally speaking, if we break, we are expecting a breakout towards roughly $59,000, with some even stating that if we see a breakout here, that it could potentially end us up at roughly $55,000 per Bitcoin, or perhaps if it happens slightly earlier, back towards these prices here at 53. That's because you have to understand, this consolidation phase here has lasted basically a month of just a lot of indecisiveness, but I honestly don't really think it's going to get that far. And more importantly, as I described in yesterday's video, if we get towards 59,000, I'm just opening massive long positions because I kind of see that as one of the worst case scenarios. And just to keep everybody in the loop, if you're telling me or asking me, Dusty, why do you keep talking about these bots? It's only because these bots make the dip buying strategy that I've got a little bit simpler. You can do it over on Bybit, you can do it over on OKX, which I personally use. A link is down below for all of these exchanges, and you can find it very, very simply. But I described it already a little bit earlier. It's just a matter of it buys somewhere. Let's just say it buys for the first time right there. We set a target for, let's say, for example, 1% lower. So the second time it buy, it would be right there. And the third time it would buy would, for example, be whatever, right there. So that would be a third time that it would potentially buy. It's just to give you guys some idea. With the idea here being the moment that from our position, a whatever 1% or so profit has been reached, we snatch it, we take it in. And from our initial position, that would be, for example, right there. From our second position, it would kind of average out. So it would, for example, be right there. And if we were to be able to buy the third position and the price goes back up, as you can see, then, for example, we right now would snatch our profit. And that's basically all the bot does. Now, I've got multiple different ones. And this one is a slightly more bear market friendly type of strategy because the orders are very wide. And that's because, as I said, we just broke out of this consolidation range into a sort of a broader consolidation phase. Whereas we were ranging before, right, mostly going sideways. We had a breakdown. You have to understand that very often that is followed up by some more volatility. And even though volatility is your friend because you want the price to go down lower so you make more profit, if we are seeing chances of Bitcoin going towards 45,000, for example, it's sometimes preferable to have some slightly wider orders so you have some more leeway and you don't have to be behind your computer all single seconds. But again, let me remind you guys that the broader strategy is just up only. And that's why I've not set up any grid bots. And what a grid bot will basically do is basically buy on the way up and try to sell on the way down in terms of longs and shorts. I'm saying that the complete opposite way. Buy on the way down and sell on the way up. Hopefully I said it right. Maybe I didn't say it wrong. It's basically just going towards both sides, and if you are trading sideways like we did here for a good little while, that can be extremely profitable. Anyway, what's also important to understand is wherever there's a downside potential, there's also upside potential, specifically with these triangles. And if I had to angle something, somewhere in the $84,000 range would make sense. But from a liquidity perspective, we can see most of the pressures towards the upside, but it only becomes apparent if we actually zoom in and take a look at the weekly performance, the weekly liquidation heat map, and there we see some massive leverage slightly above us at the $72,000 mark. And for all of you that still don't know how this works, in short, it predicts the price levels at which large-scale liquidation events may occur. A liquidation event occurs when a trader's position is closed due to price fluctuations and their margin account balance is insufficient to cover the open positions. To prevent further losses for both traders and exchanges, most exchanges offer a liquidation level, which is the price at which leverage trades will be forcibly closed. As more estimated liquidation levels are added to a particular price, the colors on the heat map change. The color range goes from purple to yellow, with yellow representing a high number of predicted liquidation levels, allowing traders to identify areas of high liquidity. And why is this relevant? Well, because usually liquidity acts as a magnet zone. Wherever there's liquidity is where the price usually flows, which is why we've got this underlying bullish bias. Magnet zone. Concentration of potential liquidation levels within a specific price range may indicate that the price is likely to move towards that zone. Some traders utilize these liquidation levels to gauge the possible direction of price movement and as additional indicators for conversions, but also obviously as a major resistance or sometimes as a support, because at the end of the day, even though it attracts, it is also a pressure point that people would like to defend. I feel like I have to mention this again though. The reason I just described 59,000, even 55 as good in comparison to bad or something that I would be afraid of is because in a bull market, these are your opportunities. This, for the most part, is where the majority of the profit is made. And we know that the average drawdown, the average correction is, I'm going to say roughly 28% perhaps. In the 2016-27 run, it was significantly higher, but in 2021, it was already significantly lower. But it's just to give you guys some indication. On the way up, there are many bumps in the road for various weeks. But let me tell you, that ain't bad. Matter of fact, it's a profitable thing. It's a good thing. You want this to be the case. Little side note, sometimes it's funny to look back at previous moments in the market, thinking of how obvious it all was. But again, hindsight is 2020. And if you're wondering why I keep talking about this $60,000 or $59,000 buy range, it's because some of the indicators were pointing towards 59,000 as the lowest we could go. But if we're looking at this Fibonacci, we can see that at roughly $60,000, things get very interesting. I mean, previously here, as you can see right there, on March 16th, we failed to hold this level and broke towards it, almost hitting it. And we actually opened a position there, if I'm not mistaken. Perhaps it was actually earlier that we opened it there. I can't remember. If we didn't, well, we should have, because it did make sense. Before quickly coming back upwards, and instead of reaching this previous top, like we were just talking about, it traded sideways for a little while before breaking down yet again towards this previous Fibonacci bottom. And right now we basically have another decisive moment where either we break down again, hopefully get sweep back up, or we're gonna beat what we couldn't beat before. Where, like we just said, we have already been consolidating for a little while, but we're right now at a really important bottom that we kind of move upwards from here, go towards this upper mark, and just go crazy from there. With, however, $72,000 as a little bit of a threshold in the middle because of the liquidity issues we just talked about. And one thing I'll quickly do here is come back on our range theory. As the Bitcoin halving is only like 2.5 weeks out or so, I think like 16, 17 days out. And what we described before is that what happens usually is that Bitcoin breaks its all-time high and sets a new all-time high, both pretty quickly after the halving occurs, the blue line here being the halving, then corrects roughly 80% and repeats. So again, breaking the all-time high, let's see here, from June to March, so let's say a couple months after the halving, which is a 4-year period, it breaks the all-time high before hitting a new all-time high. In this case, you're roughly a year and a half into the halving. In the 2020 cycle, so the previously, it was quite similar. Breaking the let's see here, the halving in April, breaking the all-time high, let's say December. So, half a year later, hitting a new all-time high, as you can see right here, November of the next year. So again here, roughly, let's say a year and a half afterwards. This is the first time ever that we broke the all-time high before the halving even occurred. But generally speaking, we expect the trajectory to be the same going into the halving. So just mostly gains from there on out. Again, guys, if you've not pressed that like button yet, make sure you go ahead and do that. I'll be putting up a couple of different tutorials as well on the channel very soon. If you guys are interested in that, make sure you put that notification bell on so you're always caught up to date. And if you're looking for an exchange to trade on, I've got links down below to all the ones I personally use, like Bybit, like OKX, or like Deepcoin, that you can use with a VPN from anywhere in the world. And that's about it.